Chapter 2 in our financial literacy course is about learning how to budget, save your money, and ensure what you have. We'll start with budgeting. Your financial success is largely a matter of choice, not a matter of chance. You want to keep this statement in mind because it is a choice to save and not a matter of chance necessarily. A budget is where you make and implement these choices that you've made. It's a plan for spending and saving. You want to consider what is important in your life, so it's a very personal item. It does give you control over your finances. A budget is usually a paper or electronic document used to record both planned and actual income and expenditures over a period of time. You want to keep it simple, and you want to adjust it as your financial circumstances change. If you get a raise, if you get changed jobs, the amount of income or the amount of expenses changes, then you'll need to adjust it. Make it personal. As we learned in the first chapter, financial goals are a direct outcome of your personal values. So each of our budgets will be very personal to us. Keep it flexible. We've already said that as changes occur, you will need to adjust it. So it is a working document that may need tweaks from time to time as your circumstances change. Be positive about it. It's not supposed to be a negative or a consequence, but it's a proven sound tool that will help you. To create a budget, the first thing you'll want to do is record your expenses for a month. Be sure to be very specific with your information. Everything that you purchase. It's kind of like a food journal, except this is a spending journal. Record income and necessary expenses. This is your income that you actually have to spend, so it's after your employer withholding taxes, your net income. List the items that you know you need to pay for during the course of a year. You want to also include anything that you have to pay every 6 months, such as car insurance. Most of us do pay that on a monthly basis, so we don't have to do that. Then you want to subtract your expenses from your income. If you're lucky enough to have extra, this is called discretionary income that should fuel your financial goals. And that could be an emergency fund, taking a vacation, paying down a debt, a lot of things. If you come to the realization that more money's going out than coming in, the next step in the budget is to make some budget adjustments. Some of your expenses are fixed, such as rent and your utilities, etc., car payment. Not all your utilities are fixed, because you can save some on electricity by moving your thermometer up during the summer. Some of those that are flexible, though, that are definitely flexible, are entertainment, clothing, groceries, eating out, and such. But be realistic when you are adjusting your budget. Don't cut the food that your house uses, the grocery money, when you know that you cannot stick to that. The bottom line is that you don't spend more than you earn. So if there's no way for your budget to come out balanced at the end, then you may need to find a second job. You want to be sure that you're adhering to the budget. Once you've spent your money, for instance, for entertainment, then at that point you should not spend any more that month. You can save while you're in college. You may not save as much, but you can save some. Open some sort of savings account and put money aside each month, or actually the best thing to do is to have it moved in there automatically so you don't ever even see it. Cut back on your expenses so that you're not broke or fall short. If you are working full or part-time, you should strongly consider this choice of putting money aside each month. And also shop for your banks. Major banks all vie for student accounts. So you want to look for banks that may have no minimum balance, no monthly fee, online banking, etc. Do shop around for your bank. Weigh the benefits that each bank offers and read the fine print to determine any hidden costs. And of course, cut back on expenses. Easier said than done, because many of them are fixed, but there are some that are not fixed that you can cut back on, even though you may think you can't. Food is one that you can cut back on. If you're eating out all the time, that will wreak havoc on your wallet. If you're buying sodas all the time, that will do the same thing. Go grocery shopping on a full stomach so you don't spend as much. Always use a list and stick to it. Limit the number of trips to the store each month. If you go on a monthly basis, you'll spend less in the long run than if you go each week. Get a local grocery store saver card if there's one available, and use coupons, as someone said in one of the discussions. And of course, sales flyers. Purchase basic ingredients so that you always have those on hand. Rice, potatoes, and those kinds of things. Transportation. If public transportation is available and you're lucky enough to have that, certainly you should use it. Limit the use of your car and keep your vehicle in top shape. For entertainment, 3 of the most common where college students spend are movies, concerts, and eating out. And they make some suggestions about using your computer as both a television and a stereo, which I think most students do today already. Rethink going to the movies. Rent, don't buy. I'm not sure that one still qualifies. And take advantage of free local and campus events. It's very important that you start as one of your savings, saving for a big purchase. If you have something that you want to buy, you should always, of course, check the Consumer Action Handbook. Decide in advance exactly what you want. Do research on the item, especially today where you've got lots of reviews and you can check the reviews, but be sure you're discerning when you're checking those reviews. Gather information about the seller and the item or service you're purchasing. Review product test results, which you can get a lot of that in the Consumer Action Handbook. Get advice and price quotes from several sellers. In other words, avoid convenience shopping with just going to the first auto lot and buying a car. And check out the company's complaint record with your Better Business Bureau. Be sure to keep in mind that what you want and what you can afford may be 2 separate issues. So as you're shopping, you should have an idea of what you can afford before you go in. Do the math to determine that you're doing what you need to do. Decide where to save your money. Consider using layaway if there is one available. We don't have that many layaways anymore. And bring in the experts before you make a final purchase. For saving for emergencies, there are such emergencies, of course, most of us have them, anywhere from job loss to car or house repairs or some significant medical expenses or being out of work for a period of time from illness. Rule of thumb is that you should have anywhere from 3 to 6 months of net income in an emergency fund for emergencies. As your financial situation improves, you should also improve your emergency fund as well. Saving for the future. You've identified your financial goals. You know your current financial situations. You recognize varying ways to save money so far, hopefully. And so now we're talking about retirement planning. To be financially secure in your retirement, you must plan for it, commit to that plan, and use your money wisely. Some pretty interesting statistics about how many Americans actually save for retirement. It should be a priority for even those that are in their 20s. Know your retirement needs. Of course, those may change before you retire. Contribute to your employer's retirement savings plan. Learn about your employer's pension plan. You should be very aware of that. Consider basic investment principles. Don't touch your retirement savings. When you leave a company, sometimes it's tempting to take the money out, but you want to always invest it in something else instead of using it, such as an IRA account. Find out about your Social Security benefits and primarily ask questions so that you are familiar with retirement plans. The final part of this chapter is insuring what you have. Basic insurance coverage, as most of you already know, is essential. In fact, it's a law to have your car insured. It protects your assets and finances from accidents, illness, theft, and other financially damaging situations. You can overinsure, so be sure that you do check to make sure that you're not overinsuring or underinsuring, both ways. Or getting the wrong type of insurance. Be sure that you do have the correct type. And also don't make the mistake of not shopping around for insurance, because there are different costs, different prices for your insurance. Be sure that you have adequate coverage on your car to replace its value. Don't make the mistake that many young people do make, and that's that they don't need health insurance because they don't go to the doctor very often. You never know when you may have an accident or when you may have a serious illness that could devastate your budget. Be sure your property is insured. Of course, if you have a mortgage, they require that asset be adequately insured since you don't own it outright. Renter's insurance is also very important, as many young people rent first. Life insurance, it's more important to have a policy if you're married and or have children, but the earlier you get a policy, the better off you are. And this is the end of this chapter. Some things to keep in mind. Budgeting is an important financial tool. A budget is a working document that should be adjusted. You should be sticking to your budget for it to be effective. The chapter tells you about many ways that you can save money even while you're in college. Gives you ideas on saving for a big purchase and about before you make a purchase, doing your research. Save for emergencies is a necessary action. Saving for the future is primarily about planning for one's retirement, and having the right type of insurance policies will protect your assets, your health, and your loved ones. End of this video.